Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome, everyone, to the Poised for Exit podcast show. We have two guests who are CPAs, and they specialize in estate and tax planning. And we haven't covered that topic on this show for a long time. So business owners, listen up. You're not going to want to miss this. We're going to get to this interview right after we hear from our show sponsors.
For business owners, it can be overwhelming to start planning a transition or exit strategy, but it's so important to avoid unwanted outcomes and unexpected tax bills. The CPAs at JAK, John A. Knutson and Company, can guide you and help make sense of the numbers. Our firm was established over 90 years ago, and we've assisted countless companies with ownership transitions. Leaving your business is a process that takes time. So contact us today to discuss your situation. Visit our website at jakcpa.com. That's jakcpa.com.
Are you a business owner getting ready to transition? If so, I recommend True North Mergers and Acquisitions as your confidential strategic partner. They understand your business sale isn't just about one buyer and the price, but what you net that counts. In other words, what you get to keep. When you're ready for a higher level of representation that delivers consistent results, contact True North M&A to do the heavy lifting of selling your business. Learn more at tnma.com. That's tnma.com.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, Certified Exit Planning Advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Hello, Poised for Exit listeners. We are here today with Cindy Mclagan and Jonathon Lansink from John A. Knutson and Company. Cindy and Jonathon, welcome to Poised for Exit.
Thanks for having us.
Yeah, thanks for being here. Like I said in the opener, we are going to be talking about estate and tax. And honestly, I don't think, I know that I've covered that on this show in the past, but it's probably been a year and a half or 2 years ago now. And so it's totally over time, right, for us to get this back on and to be talking about this, because there are so many owners out there who are in the throes of planning for their transition. But before we dive in, I like to just follow my tradition of asking you to share a little bit about yourselves, your practice, how you got into accounting or whatever you want to share about yourself. Cindy, I'll start with you.
So I got started in accounting late in life in my 40s. And I've been here at JK for about 10 years. Before that, I was in Florida for a number of years. And my dad was a CPA, and I decided, that I should give it a shot. And that's, got into the estate and trust area. And dealing with death and taxes seemed to be something I could do well. So I've been sticking with that for the last about 20 years.
Very important. Awesome. Thank you. Jonathan.
Yeah, sure. So I started with JAK almost 6 years ago, and I've been here ever since. And, I started off just as your typical staff accountant. I did a little bit of everything, but I kind of quickly learned that I like the tax world. And as I got into that tax world, I learned that there's a lot of different kinds of tax. And so after I prepared a couple of these types of returns, I figured I really like working with these, higher net worth clients and getting the whole life planning in. And so that's kind of where I come in on this.
Very important, right? Yeah, like the holistic view. So when we look at the estate tax perspective, tell us about, what business owners should be thinking about as they prepare to sell their companies.
Yeah, sure. So I think, an important first step, because a lot of these business owners, it's a really big asset of theirs. And so I think if it's going to be their primary retirement asset, first
Right.
they should make sure that, they're themselves, that they are covered before they think about too much of this stuff. So first, we want to make sure they have enough money for themselves to live the life that they want to live, right?
Mhm.
And then once they're comfortable with, their own income and such, likely with the help of some kind of advisor or something, then we can kind of go on to ask those basic estate planning questions like, do you have a will? Do you know who you want to receive the assets when you pass away? A very important first step kind of before we get too complicated, right? But once people have some of those basic things down, yes, I have enough money for myself. Yes, I know who I want to inherit my assets when I pass away. Then we can kind of follow up with the next question, which is, are you interested in potentially giving some money away during your life if it might be able to save you some tax, right? So if more money can go to oftentimes kids or grandkids or whoever, then are you willing to do that? And if so, we can kind of work with them and plan with them on that. So,
Yeah,
yeah.
no, that's good. I'm glad that you're bringing that up. Nobody really likes to talk about death, but it's going to happen to everybody. So the more we plan ahead, right? I literally just heard a story that was so sad, that was so preventable. But yeah, I think we all have. So maybe you got an example. Do you have an example that you could share, that kind of illustrates the importance of this?
Sure. Yeah. I mean, so based on how estate tax works, I mean, there's actually times when if you give away your money, you can fully, completely avoid certain types of estate tax. So we can talk about how Minnesota rules are a little bit different.
Sure.
So if someone were to have passed, given those assets away, however much really, just some number of years before they ultimately passed away, their tax liability would have been completely wiped away, right? So we do have people come to us, and of course, oftentimes it's after the fact, right? So then we
Yeah.
can't work on that planning, and ultimately we just have to take things as they lie, right?
Mhm.
That's pretty common. We try and avoid that when we can, but we're going to help people with their filings as well. So if they come to us after the fact, we'll do our best with them as well. But for our clients, we want to try and keep this up early and, have those conversations as they start to retire.
So let's talk about gifting. I'm sure that there's a lot to know about that, and there's so much about these that we could unpack and probably talk about for quite some time. So I know this is all high level with the amount of time that we have for the show, but Cindy, maybe you could address that topic, giving away money during your lifetime, and how does it save you?
Well, it's important for people to understand that federal and gift taxes are tied together, right?
Sure, right.
So you have a couple of buckets. You have your annual bucket of your gifting. How much can you gift each year, right?
Yes, right.
Then you have your second bucket, which is how much can you gift over your lifetime?
Your lifetime, sure.
So every year, you fill your annual bucket. Once you've gone over, then you go to the next bucket. That's when you need to file gift tax returns. And I think a lot of people misunderstand, what is a gift tax return? Do I have to pay tax right away? Or does somebody have to pay tax? It's more like an informational return, letting people know that you're starting to use your lifetime exclusion amount, right?
Okay.
So right now, what is the lifetime exclusion amount? It's at 14 million. And, now I think, Jonathan, what did they say? They think it's gonna, maybe the new law will come, right, started at 15 million.
Okay.
Yep, exactly.
Yeah. So, people need to look at how big is their business? How much is it worth? How can they get use up their lifetime exclusion before they pass away by gifting away some of these assets and using up the 14 million now for 2025. And if it's a couple, they have double that, right?
Okay. All right.
So-
I wanted to make sure that I understood that. Thank you for
Yep.
bringing that up. Yeah. And that's all assets, right? Their
business, anything that
Yeah.
is an asset in their name.
Sure.
So a lot of times people will have assets or insurance policies that maybe don't pay to the estate or whatever. That's outside of their estate.
Mhm.
So once you start gifting away things like your business or your, personal assets, whatever, money, cash, then that's out of your estate, right? And then that gets moved out. So when you pass away, it's only what is still in your name that is in your estate. So that's why it's very important for people to file gift tax returns, because sometimes people don't. They just start giving things away.
Yes.
And they don't realize that they have to send those sort of informational returns into the IRS, because the IRS could come back later and say, hey, it doesn't matter that you gifted, you never told us. And we had this happen. And
yes.
Oh, well, your estate's actually worth 20 million. You said you gifted 10, but you never said anything to us about that you did that. So that's why working with an accountant and talking about what your annual tax filings are is very important. Even with a business and you're only giving away maybe the annual exclusion amount to your kids every year, maybe you just decide, I only want to give them $18,000 a year as opposed to, a big amount. It's still a good idea to file, an informational return so that the IRS or the government knows, yes, you've been gifting all these years. So this is all a legitimate thing. When you pass away, maybe half of your company is now out of your estate. I think that's important for people to understand as well. We call it adequate disclosure. So.
Oh, for sure. Right. Yeah. Leaves out the unknowns. So thinking about the kids, trust fund babies. No, we don't have to go. I'm thinking about gifting to kids, and what are some of the best rules of thumb or practices that you recommend when you've got clients who are like, oh, I really like to give it to my kids or my grandkids. I just don't want to dump that much money into a bank account for them, right?
So in this case, you can still get gifting done if you want to do that. In this case, you can use a trust, right? So the kids don't have to have immediate access to these funds, right? So trusts, they're very flexible. You can customize the rules however you want, so long as that's legal. But really, for the gift to be a true gift for estate tax purposes, we need to call it, is it a completed gift? So ultimately, when the money goes into that trust, you shouldn't be able to change it or take it back, right? We do have these other types of trusts that are called irrevocable trusts. A lot of people use that for planning, and those are very flexible. You can change them at will. But if you're going to have any estate tax purposes, right? If the IRS is going to say you've completed that gift, then you can't have access to those assets anymore. You can still serve as the trustee and such, but you can't make changes, right? Okay. And so you can absolutely lock away some money and say, look, I want my kid to have this eventually. I know I do, but I don't want them to have access until they're a certain age. And then I only want them to have certain kinds of access, something like that.
So when it comes to working with estate planning attorneys who understand business succession too, right? I imagine that's a pretty important relationship for both of you to have in your network.
Yeah, I usually talk with my clients about their team. If they come to me, we want you to help us. I always say, okay, then let's build a team and we'll each stay in our own lane. So you get your lawyer, you get your accountant, and you get your financial advisor. And as long as we can all work together to help you, that's what's most important. And if I have a question about a trust, I call the lawyer. If he has a question about taxes, he calls me. And that way we get the best answers, because sometimes trusts are written and we'll look at them and say, that's not really the best tax benefit for the client or for the beneficiary. So let's see what we can do to help with, adjustments so that there's a better tax outcome for them. And the same goes for them. They may ask us questions as well. And so that's the most important part. Gather a really good team and make sure that they all know who each other is and work together. Because usually your lawyer you see maybe once every 5 years, but your accountant you see every year, and maybe your financial advisor you see several times a year. So it's important to let everybody know what's going on.
Well, and then when they're creating these trust documents and instruments, I know that it happens where they're created, but they're not funded. So in your opinion, whose responsibility really is it to make sure that those trusts are funded?
we see this all the time. We've
I
had
know. Yeah.
million-dollar estates, or multiple million, where they spend thousands of dollars on these beautiful documents, and not one thing has ever been transferred into the trust.
I know.
And people just assume. I think
I
the
know.
lawyers need to,
Yeah.
let the clients know. And I know Jonathan will say this too. We always ask our clients,
Right.
well, we see you have a trust, but we've noticed that things are not funded, are not titled. Your
Right.
property isn't, your investments aren't, you may want to do that. It's not that difficult.
No.
You don't have to call a lawyer. You just have to provide them with a copy of the trust. Maybe real estate, you'll have to, go through and have some
Sure.
paperwork done. But other than that, so that, yes, that's probably one of our number one things we see failures with estate planning, is people not following through with that part of their.
Yeah, I figured that was the case. That's why I brought it up, because I thought, with the listeners out there, this is something that does fall through the cracks too often and can really be devastating, and is preventable. So let's talk about Minnesota estate tax. There's kind of a big difference between federal and Minnesota, right? Jonathan, maybe you could speak to that.
Yeah, sure. So hopefully your listeners didn't hear the $14 million number and then think, oh, that's okay, I'm not that big yet, But Minnesota, their exclusion is only $3 million.
I know.
So anyone who lives in Minnesota or owns Minnesota property really does need to be careful about Minnesota's estate tax. So, we said, as Cindy said, the gift and the estate tax on the federal side, those are connected. So whether you give gifts or whether you pass away and it's inherited, the IRS is tracking it all throughout your life. But Minnesota is actually different in that regard. Minnesota doesn't have a gift tax at all. So they're not tracking your gifts. Instead, what Minnesota says is, look, when you pass away, I'm going to take all of your gifts from the past 3 years. They're going to look at your federal gift tax returns for that. And we're going to pull those back into your estate. Okay. So Minnesota, actually, as long as you give a gift and then you outlive that gift by 3 years, that's not taxable at all for your Minnesota estate, and it's not even included at all. So it is possible to fully gift away everything to get under that $3 million exclusion, to fully avoid Minnesota estate tax. You just have to be really careful with it. And another thing that's really important about Minnesota is that a lot of people who aren't residents of Minnesota don't know the rules here. And so if you own one plot of land or one cabin or whatever it is in Minnesota, even though almost all of your assets aren't in Minnesota, you still may have to file a Minnesota estate tax return when you pass away. And so that might not be part of the plan, because your lawyer, your accountants, everyone maybe isn't in Minnesota and don't know Minnesota law. So I think that's one common misunderstanding is, hey, I don't have $3 million in Minnesota. It doesn't matter. If you have any assets in Minnesota and your total estate is more than 3 million, you still have to file.
And that goes for cabins, I bet.
Exactly. That's the most common one, right, Cindy? You've seen that a ton.
Or they have a family farm, or even if they're a partner in a business, that's based in Minnesota. We've just did a California one where she doesn't live here. She's never lived, she hasn't lived here for years. The lawyers out in California had no idea, and she had a business interest here that she, in a mall, and we had to file, a return. Now, she only paid tax on the portion, the Minnesota portion, right? But it was still, we had to do the filing. And that was very important.
Exactly. And so when that thing does happen, when someone either isn't a resident of Minnesota, or maybe they're changing their residency away from Minnesota, there are strategies to gift those out into trusts or to some kind of planning to make sure that they don't then have to pay any Minnesota estate tax. Like we said, you could put a cabin in a trust, and then you can still potentially use it, you and your family, keep it in the family, but it doesn't kind of cause this big holdup within your estate.
Is there a specific type of trust that you put real estate in that's different than, say, liquid or semi-liquid assets?
Well, it would have to be an irrevocable trust. Because anything in a revocable trust, of course, is,
sure,
changed.
You have access to it, sure.
So, and that's something that's more of an attorney question, what's the best, they have different types of trusts you can set up. And I know that a lot of people have done this utilizing their lifetime exclusion amount by taking, this house and these different trusts that they've had. And so we don't, that you've heard about the slats and the different things people have been using these last few years. And that's really a legal question. Ask the lawyer, what would be the best thing to move this asset out of my estate? What documents should we use to do that?
Yeah. Well, and when it comes to generational family businesses, and I know you guys have got clients that fall in that category, it gets a little bit more complicated, right? Trying to be fair and equal, and fair isn't always equal, and all the rest, right? Makes me think about how important it is for business owners to have the relationship with the accounting firm as closely as they do with, say for instance, whoever their CFO or controller is internally in the company. And I encourage my clients to have conversations with their CPA more often than once a year. I mean, there's just so much more to talk about. And if they're not talking to you, then they're missing out, right, on your advice and the strategies that, you could be presenting to them. So I guess that's kind of my next question. As far as acquiring new clients, do they primarily come from the outside where, say, for instance, their estate planning attorney or their financial advisor refers them to you? Or are they current clients who are already working with JAK and whoever is their primary account executive is just handing them off to you for some advice?
Well, I guess we get them from all over. We do have existing clients. That's one pool of clients. We have certain attorneys who, refer us all the time. They do all their paperwork and they'll say, you need to see an accountant to talk about, like if they need a gift tax return done or whatever. We also get a lot because we do prepare those gift tax returns and the estate tax returns. So, that's another lawyer, a financial advisor, all different ways we get estates. And because Minnesota has that 3 million, we get a lot from, places outside of Minnesota. A lot of attorneys will call and, I have this client, she has a cabin, she died, how can you help us? So it's really everywhere. I mean, we get it from all sides and, just we answer a lot of questions for people. And that comes up a lot as well, where people they just want to ask questions and we always take their calls. And a lot of times they'll come back to us later with, once they've sorted out what they're going to do with their estate.
Yeah.
Well, you bring up a really good point. I'm just thinking about the fact that this show is listened to by many advisors and business owners from across the country and in different countries, actually, more than ever. And from, the fact that you just mentioned someone from California who had a lake home in Minnesota, there's all kinds of people from different states, right? Whether they're from here or not, that have lake places in Minnesota. And so, bringing up that point, those listeners out there who have family members with cabins, at the lake here, they're going to need your services. So I'm glad that we talked about that. Jonathan, you had a point.
Yeah, no, you're exactly right. Just to build off of what Cindy said, the onboarding process with us, it may not seem as similar as maybe some other accountants because since we do a lot of this estate work, we need to see all of those legal documents, right? So you may not think, why does my accountant need a copy of the will? Why do they need a copy of this trust? Well, we don't actually know how that's going to work with your estate tax and income tax until we read all of those documents, right? So it is kind of very helpful to have that team together so we can get all those documents together before we can even determine what, those taxable events are.
Well, and I love that you mentioned too, Cindy, when you were talking about assembling the team and how important it is to bring the financial advisor to the table as well. Because the financial advisor should have like the whole picture of the business owner, not just their business, but their family life, their assets, whatever it is that they need financially to support their lifestyle after they exit, whenever that happens, right? And so you can't really make good advice about, tax and saving money on taxes unless you have the big picture, and they would be catalyst for being able to share that with you, I would think.
Yeah, I would say we work with financial advisors the most.
Sure.
To talk about, where should we put this and, what can we do to plan and And, of course, we're always, how is everything titled and how much should they take out of this? And should they do that? And do they have enough for retirement? And, where should they take their money from for gifting or, other things, as we do work with the advisors a lot about that.
Yeah, I'm really glad to hear that. And so lots of financial advisors who listen to this show, if someone like Cindy or Jonathan is not already on your team for your clients, then you definitely need to add these folks to your team. So last question, when it comes to preparing, I'm a business owner. I know that I need to get my financial house in order. So I need to talk more regularly and thoroughly with my financial advisor who says, you haven't had your estate plan updated in a long time. You're going to end up with, this liquidity event where, maybe we should plan for that ahead of time. I'm just wondering, like, in your mind, what would best practices be, or what would the process be if I found myself in a situation where I know that I need to do more planning? Like, I've done very little planning. I find this all the time, you guys. That's why I'm bringing it up. But what would you tell a business owner that's found that they haven't done as much as they need to do? Like, what would you recommend for the process?
I think my first thing would actually be to assemble that team. So usually someone does have one person that they trust the most. And oftentimes we have other people that we're very comfortable working with, right? So if we're that person, then we can kind of know that client and say, well, look, I know I have an attorney that I think you can work with. I know a financial advisor that you can work with. It's really important that we not just try and take that whole client on, because we aren't able to take all of that at once, right? Like you said, it's a huge liquidity event. It's a ton of cash. We don't manage investments, right?
Right.
So we can only kind of manage that side of the conversation. So really it is going to be letting that person know that absolutely we're here to help you, but we're going to need more than that.
Mm-hmm. Yeah, there's really never one single advisor that ever has all the answers with, situations like this. But I think collectively we can get pretty close when you get the right people at the table to support the owner. And it just helps them sleep better at night when they know that they've got people like you, covering them. And that's very comforting. So, well, gosh, there's so much more that we could talk about here, but we've run out of time. And I just want to say thank you, Jonathon and Cindy, for being on the show. Thank you, JAK CPAs, for supporting this podcast. We just continue to grow our listenership and grow the fans. I just want to say that I recently attended the Exit Planning Institute Summit. It's amazing to me how many people out there in the world, especially in the United States, who are listening to this show and the impact that it's having on the advisors and their clients. So kudos to you for being a part of that and for being on the show today. I really appreciate it.
Thanks so much.
Thank you for having us.
Absolutely. Absolutely. And thank you to our listeners and to all of our sponsors. We really appreciate you and the impact that you're making in the world, especially for our business owner clients. So thanks again, and join us again next time.